This is just AMZN on Friday, August 31st, last day of the month, and a holiday weekend ahead. So I think we were talking yesterday that it's probably going to slow down a little bit, have an inside day candle. And so I've got the high up here at 2025.57. I went back and looked at some candles in here to figure out, okay, where exactly is a good place for this? I ended up settling on 1990, and not just because it's a nice round number. I mean, 2000 is a really nice round number up here, but didn't really interact with 2000 that well. But I was looking at the 1990 price, and now I'm thinking years, 1999, right? Looking at the 1990 price, and back over here, the first time it got there, it put in a high on this candle, the bullish candle of 1990, and then the bearish candle, another 1990. That's a tweezer top. Tweezer top that ended up breaking down, only to retest, go sideways, break out, retest again, break out some more, came back down into this range, and then got above it, stayed above it here, and then flashed down into it, and then got back above it. Didn't even close under it again. We're staying above 1990. I mean, and then here wicked right into it, the low exactly 1990. So, you know what? I thought the wick actually went a little bit below. So 1990 is a good level to have on here. And I mean, a good year probably, right? I mean, I was pretty young then, but anyway, it was a long time ago. We don't need to talk about that. Anyway, next week, Monday is a holiday. I'm doing some traveling. I'm going to try and keep up with doing videos Tuesday, Wednesday, Thursday, and then I should be back in a routine, but back home for a routine and all. But for traveling, I should have some time to do videos. They may actually be earlier in the day. Hopefully they will be early in the day. So I don't have to put these out so late after all the rest of the things are done for the day. But anyway, getting into this video. So I showed you this just to share where these prices came in. Let me move it forward a few more minutes because we're almost at the open here, 825. Okay. So right here, pre-market, I love that pre-market candle. That candle I really wish was the very first opening candle of the day because it is a gap up. So it's bullish retest. There's your retest. This would be a bracket trade. Get in at 2011, the stop down at 2004, and take it up to the previous all-time high, yesterday's high. And instead, that's the final pre-market 5-minute candle. And what's unfortunate about that is, we're looking like we're going to open right in the middle of the range, which again is just a bracket trade. It's just okay. What's our actual setup? But you could have bracketed this, could have worked. But looking at the very first opening candle, it was this. The low was actually 2004.74. So the low I said would have actually worked. You're below some of this support here, and you're triggered into the trade. Now, most likely, almost 99.99% sure, it opened here, moved down slightly, and then just ran. Probably would have it, then came back to here. But either way, we were triggered in, doesn't come back down here. It actually pushed a little bit higher. You're up probably about an R at this point, depending on how you got into this. If you actually got your fill price, you would have been filled here if you did anything in the first probably 5.5 minutes of the open. Got in, it's all the way up here. You're up some. Very bullish open. Much lower volume than we had yesterday. Some smaller candles. Okay, here's a bearish candle. All right, where's that at? Looking at yesterday. Okay, it sold off here. Had a bearish candle after a few bullish ones. That's okay. We pulled back a little bit and then ran up into this level. Maybe that's just what we're doing today. Sideways. And we're sideways. We break out. Then we have this indecision candle. A little bit higher volume these last couple of candles, but this location is the retest we got of this breakdown of this candle breaking down. The consolidation here, we actually broke down from here. We're right in that same range where we sold off. This is technically a lower high. Today is a lower high, really, really close to all-time high. We're stone's throw away, literally so close. And at this point, you're up probably an hour and a half. When that candle comes in, I'd be tightening my stop if I was in. get it real tight, get it, up here, lock in half, so, get your stop real close, or just get out, because it's so close. Why risk, losing all the way back down to here if it's just going to tag that, and then, it'd be a third touch of the resistance. But right now it's not even up there. So be aggressive at this point, because we should be getting an inside candle today with, the moves we had, and then a holiday, all these things kind of just say, let's just be, real aggressive, and get this stuff taken care of, and just, go home early, essentially, when it comes to the trades and everything that you're doing. So the other thing with this candle is you can start looking at, is there a reversal here coming? Because we had that yesterday. We had this sell-off way back down to 1990 yesterday. I doubt we'll get this far down. If we can't get up to this high, I doubt we'll get all the way back down here. We had, some aftermarket, pre-market in the low 2000s. That's as far as I would expect to get. Maybe 2000. But there is, if you stay inside of, or stay above the open from yesterday, seems reasonable. But anyway, it could move forever, but I don't expect having this kind of a sell off. I'd expect a little more of this kind of sell off, maybe from 20, and that'd be right back down to 2020, or from 2020 down to 2000. Sorry, I misspoke there. So start looking for a bearish candle. That is a bearish candle. Bearish trade. It starts to break down. That's an even star reversal. Okay, that's actually triggered, but it's still so bullish. That's not where you're actually, or not so bullish, but it's moving bullish. You're not in this bullish or bearish right now. Hopefully, you could do it aggressively and just be out when it comes back into some of these lows that, you make maybe half an hour or something on that. You can do that, but look for some smaller candles like that one. Oops, wrong way. Smaller candles. Okay, it's moving back up. Here we go. Here's a lower high within the same day. It's another indecision candle. You excuse me, I'm so sorry. You could be getting in bearish with a breakdown of this one. You could have had something set up to get in this candle's range, going bearish, and a stop above it, stop up here, something like that. And so this being lower highs, higher lows slightly, you could really start looking for this to, this being the high and roll over. Or if you are still in and you've been trailing up, and your stop's up here now, maybe up here a little bit, get a little tighter, because this is giving you some indecision, saying, okay, it's not looking good to continue on up. This is our kind of, just like yesterday we had, okay, this is our first signal, I'll break down. Here's a consolidation. Here we rejected, that's our second signal. Then we broke down here, that's our third signal, saying, okay, and then, even you had another opportunity here to get it on a retest. That's our fourth signal, really saying, okay, we're a little more bearish short term on this. Today, we have indecision at the same level. That's kind of first signal, second signal. Here's a third signal that, or second one on the day, but third signal saying, okay, we're really not getting up through this level today, and really aggressively look for a bearish move. So if we continue on the day, you have a very small candle. If you squish these together, it's, inside candle, and it's breaking down from where we were on the first indecision. So I have all this just sideways. An hour of just sideways in here, and some indecision candles up here. Now you're right back down at these lows. You're probably about to get stopped out of a bullish trade if you're still in here. We have some really small candles that this bullish one is a bullish engulfing, and now that's broken down. We've actually moved up above it, and now we're below it, and that's a bearish engulfing of what was a bullish engulfing. Still some low volume, but we have more volume on this candle now, and a bigger move. We got a squeeze. That's lost bullish momentum. A third lower high. I'd be looking for a place to get in bearish here, and definitely get out of the bullish trade if you're still in it. It has a little bit of a pause here, and then a breakdown, and you're down close to 2010, and it moves down. It's just chopping around through here for a while, and then actually comes back up here to retest a little bit. And I was looking yesterday, we're in some of the places where we had pivots here and here. Now we're kind of retesting those from below. Just going sideways. Okay, that's the most hope you got is breaking out bullish, but there's so much of this it's just been sideways that this level is actually retesting almost up to here and then rejecting it. Going sideways again and starts to break down. Sideways, break down. And now we're right back at the low from the open. And that's kind of the only last saving grace is that, all right, we're at a price where there was support. There was resistance yesterday. There's support today. That's our last place to really retest down to. But, for the shorter time frame, that is your final retest and closing that price area there. And then just continued on sideways to up from that little bit of a rally here off the low of the day. And I didn't even look to see if it was the exact low. 2004, 2004. So a little bit lower here than here. If you look at yesterday, you got a low here, a higher low, and then a high, a lower high, and a lower high. So definitely consolidating, going sideways, inside candle. We moved not quite 20, closer to like $17, back down into support. Maybe not get down all the way to 2000 today, but this is starting to look a little more bullish. But we are right back into this area where we consolidated and broke down. Now we've retested to that. Are we going to continue or are we going to roll over again? I guess that's kind of the question. And we throw an upper wick, and then we break down again. And this was a really quick move that you could have made some money on with the bears. And I'll show you that setup, how you can know that there was something to make there. And then we ended up rallying off of this low again, right off of 2005, rally up into the close. So there was some movement here that you can know with calls too. So really good moves, really in the last hour as this is consolidated for 2 days here. So let's jump over to the options. Oh, and the rest of this day, it just kind of went sideways to up a little bit. So we'll have to look to Tuesday to see what's going to happen next. So here, looking over at, sorry, I thought I switched. Looking over at the call, you would have had to been buying at the open, or that you would have been triggered somewhere up in here, or even on that pullback, with a order at like 859, something like that, and a stop down here, a stop down here. It would have been a couple bucks to trade the 2010 option, and then that was moving quickly into the money. It was way up here when it was in the 2020s when you got this candle, and then this option pulled way back. Did a very similar candle on the indecision, pulled back, and all this time it's pulling back to pretty much the same price level here, around $9, and then put in this lower high, and then broke down from there, and just was not a good thing to trade until very late when it got under $1 and then rallied up from $1 up to $5 pretty easily. So the 2010 call is something you could have traded at the end of the day, the last little bit of the day, pretty aggressively with an absolute zero, getting in for $1, getting out at 3 or 4 or possibly 5 would have filled. But when you see these candles come in, that's when you can go over and look at the put. So looking at the 2020 put, I was putting in some lows here that were setting up to look like maybe 6 by 5, something like that. And again, these candles were a little bit larger than $100, but if you see that it's put in a low here at 530 and a low here at 515, you can definitely have something set up, get in like 550 by 450. That's your $100, and that rallied up to 12. And that kind of move, I mean, that would have been, almost 7 hour, 6, 7 hours, something like that, because of what it did. By putting in these indecision candles, you're getting in even on this last one, because the puts are losing value. The puts are out of them, the puts are barely in the money right here. The 2020, was that the 2020? Yeah, the 2020 put was barely out of the money. Barely in the money here, and this was your last chance to really get in, for a 550 price. before this just collapsed. And that kind of a quick move in 25 minutes, you're up 6R or something like that. That's when you can just say, okay, I'm done for the day. Bounce slightly, kind of put in this low here, came back down to it here, broke down below it. Sorry, I think I'm fighting a little bit of cold. Here's the putting a low here. I know what I'm trying to talk to. I've just got the wrong chart up. Put a low here. What was this resistance is now support right around $8, and another opportunity here to with the 2020. What was that? Was that up here? I forgot what time that was. Sorry, that was 11:50. So 11:50 was way back over here. 11:50, you got this candle that was your strongest retest, and at some point this was looking slightly bullish, retesting this level. I mean, you have a known resistance right here. You had support here, that's now resistance, that's resistance again at this price, and you could have been actually getting in bearish here as, that's as high as I want it to go. That's the best place to get bearish. You retested this consolidation, and that would have been getting in here like probably 850, maybe 9x8, and it would have worked. It wouldn't have actually pulled back into 8, but 9x8 over this time from here. And that you could have taken back up probably to the previous highs around like 13. And if you had held on to any more into 14 or 15 possibly, would have made a little bit more. But you're getting in at like 9, moving up to 13. That's another 4R with a stop at 8. And then back up here, once you're down into the previous low, you got a bullish engulfing, and it just kind of grinds higher and then comes back almost into this resistance. Not quite, but I love that reversal candle that actually triggered bearish, retested into this one, and then collapsed very quickly almost to this low. And so just trading off of that candle, you could have been looking at puts. In this case, let's go to the 2010 because we're really close to that. And that was this candle was at 205. So at 205, right here, the put actually got under $1 because it retested, and it's just losing value because it was out of the money. So you could have actually not just set this up 2x1 looking for that to move. You could have actually set up something, okay, if I know it's losing value, that was the last chance this thing had to really move anything bullish. On this candle, it lost, the 2010 lost a little more value. Actually pushed, this candle moved it under $1, and you're $2 out of the money. That's an easy setup to say, okay, I'm risking $100. If I get filled, it's an absolute zero. It could run to zero, it could run to nothing. That's my risk, or even do a smaller risk and set this up that you get in at 1 and you get out anywhere in here, and you could have easily gotten out at 4, which would have been a 3R trade in 10 minutes. Had you had it set up to get in, you're so close to an absolute zero with $100 risk to do that. So anyway, that's the setup off of this candle when you've been moving kind of bearish, and then off of this candle, again, the opposite. So let's look at the 2010 because we're just pivoting around that here. 2010 call, again, you're under 100. Do the same thing. Set up 100 by 0, $100 risk. And you could have flipped it out for, in 10 minutes for an R, or held on through this and gotten out in the last 5 minutes, which you gotta work on that because, you're going to get nervous at that point. You're going to freak out that it's going to move against you. You're going to be up a little bit, then down all of a sudden. And there's not a theoretical option price to know where this is at, and you're not sure what the price is actually going to do, the stock itself. This one ended up closing in the money by about $4. So you should have gotten a fill to get out at 4, but sometimes the options and the spread is crazy at this point when it's doing this. At least here you would have known, okay, I'm in the money. I can get out now. If it reverses, I'm out that R probably because it'll be out of the money, but now I'm in the money. Oh, I'm more in the money. Now I've taken out that high a little bit. Let me just get out on this candle. Getting out there would have been getting out like 3. So, that's still a 2-hour trade based on an absolute zero on something that gave you that kind of candle, $2 out of the money. I mean, $2 out of the money in the last hour. Amazon can move that much. That's 0.1% of a move now. 0.1%. It ended up moving not just $2, but $4. More than that. What was that? It ended up moving $8 in the last hour. That's 0.4% that it moved. 0.4. I mean, it's Amazon. And it's moving 0.4% in the last hour. And it moves it from being out of the money to into the money. And it just gets easier to trade it on a Friday with very little risk in both directions. I just showed you a trade bearish with that candle and bullish with that candle with the option with absolute zero on both of those. And if you've done both, you're up quite a few R. If you did any of these trades today, you're up many R. And it just takes the time to wait for these candles to form on the stock and be aware of where the option prices are to be able to trade it, not just trading the candle, but it's going to try to lose value in the last hour. And these moves can be crazy. With the the theoretical option price here, it's possible that it actually touched 0.5, instead of $100, $50. I don't know exactly, and it's possible it didn't get up to 3. Maybe it got a little higher or a little bit lower. But you need the real data to actually see that. But this should be representing actual people. Sorry, this could be your midpoint of your spread or something. And you could have had people actually buying or selling up here, and definitely the broker selling you something up here. But you just gotta figure out how it's moving. And really late on a Friday into expiration, these just have these crazy spikes that almost become almost become predictable as they're moving around certain strikes. So the 2010 strike was about $10 out of the money when that candle formed. So that's one that you could easily have been looking at, say, hey, that's a good one. We were below it, and we're above it. We could do some interaction with the 2010, especially when it has this kind of breakdown. We're back down to like 2006, 7, somewhere. No, 2009 is what we're in here. And then once we're above it here and then below it here, it's like, wow, yeah, there's some pretty quick moves right around the 2010. If there's any opportunity to get something, it's the 2010 to use. So just looking at how it's pivoted around that price today and lost value on the options as it's just, moved into and out of it, in and out of the money. Anyway, look at the daily. Here's the inside candle. It's we've had 3 days in a row bullish after 2 bullish gap and goes, with another bearish day or bearish retest. Sorry, not bearish retest, a bullish retest gap in between. We still have our bullish momentum. We dropped way off of volume, most likely because we have an inside candle, first of all, and with a holiday weekend ahead. For Tuesday, it could get a slow start. If we gap below this, it would be a bearish gap and go, but I would only expect it to come back either to 1990 or possibly into the 5, where the 5 ends up moving up to. Right now, the 5 is right about at 1980. And so the previous day it was down at 1963. Now it's up at 1980. It could move another $10 based on however Tuesday's candle moves, and they could actually coincide in 1990, which means we could actually have a move right back down into support, and then do something crazy like continue going up. We've not actually touched the 5, I think, this day. 1908. No, not quite that day. We haven't touched the 5 since this day. So that's 1, 2, 3, 4, 5, 6, 7 days without touching the 5 exponential. We've done a few. We did 1, 2, 2, 3, 4, 5, 6, and then back into it. We did some. Oh no, we didn't. There. So 7 days. It'd be nice to pull back into the 5 and let a little more rest happen besides just this. But this is really bullish. It doesn't necessarily have to. We could hit 2050 next week pretty easily. It's not that far to go, especially with the gaps that have really put a lot of momentum in this. And people thinking, oh, it should reverse here. It's a holiday. We need we need to pull back some. It just could continue on higher. So I've only got about 2050 on the screen. It'd be great if we get that and then get even higher. I'll have to look a little higher on the screen. But anyway, hope you enjoyed the video. We will continue next week, and I will try to keep up with some earlier times to do some of these. And we'll go through looking at how these things move, how this Amazon's been moving. Here's your higher lows, your lower highs, and we'll see what goes on Tuesday, if we're still in this range or if we're breaking below it or breaking above it. Hope you enjoyed the video. It's just Amazon. Thanks.